to be honest, our tenants just leaving. Saw the layout, literally could just move a few walls around and intensify the number of occupants on there. And literally just upgraded the license, I think, from 11 to 15, rented it out, got a commercial val for the area, valued at 1.4.
Wow.
Yeah, so pull out your money and some.
You'll get big enough that you'll have a conversation with someone and they'll notice you and they'll just want to eat your business up into their business and they'll just blend it in. Welcome back to another episode of the Property Auction Hunters. You've got your co-host today, Saif, Derzi, and we've got Jay Howard with us. And today we have special guest, Sam Patel. Now, Sam is not one award winner. How many awards did you win, Sam, that day at the Property Investor Awards? 4.
4, yeah.
Sam is a 4-time.
Should have been 5.
Yeah.
Sam is a 4-time award winner. 4 out of 5. No, 4 out of 4 award-time award winner at the Property Investor Awards. And I just remember that when I was sat at those awards, it was just Sam went up like once, up again and again and again. So you've done really well. But anyway, we've got Sam Patel. Sam does a bit of everything. He's a property investor. He has a property portfolio. He runs specialist social supported living operational company as well. Yeah. You do some property trades, you buy from auction, you do a bit of everything. So just for our listeners and our viewers today, first of all, tell us a bit about how you got into property and then fast forward to today in terms of what you're currently doing in property.
Also, give us the headline on the deal that made you win all of those awards.
Where do I start? From the beginning?
Start from the beginning.
Start at the beginning.
Yeah, so actually did a banking and finance degree, but I had a family friend that was in property. So literally £3.50 an hour sitting in, actually not even that, just watching his builders to make sure that they were working, buying paint, driving around. But he was a specialist in planning. So I was lucky enough to kind of sit on his planning consultant meetings.
How many years ago was this?
Oh, this was like 2003.
Oh, wow. Okay.
Yeah, good.
Over 21 years ago
that's
now.
That's it, yeah. Yeah, literally then, got the property bug, I suppose. Convinced my dad to remortgage the house that we were staying in. I went into auction and bought 3 properties, traded 2, kept one of them, which I still hold. Got planning to convert into 2 flats.
Wow.
Yeah,
when was this? So this was still 2003, or
this was literally 2004. Yeah, year after.
Wow.
Yeah.
How was that conversation with your dad? Dad, go remortgage the house.
I think I kind of showed him, look, this is what we can do. This is. But I think back then it was find a property. It wasn't even move, right? So, yeah, look, this is what I reckon we could sell it for, and it just kind of worked.
But those are the good old days. You can find genuine good discount in auctions, and it puts most people off.
That's a really good example of the 3-2-1 model. You buy 3, you sell 2, you keep 1, or you sell 1 and you keep 2 or whatever. So
I don't think it was
you did that
intentionally done. No,
no,
honestly, I think I was trying to offload all of them, but it just kind of works out like that. I don't know how it was.
Sort of fast forward from 2003 to 5 to now 2024. Where are you at? What does that kind of journey in property look like for you? The ups and downs and what you've done in property.
Oh yeah, loads of ups and downs. Going from so after that kind of trading. It was kind of easy with the Mortgage Express products and signable contracts and no stamp duty and all the rest of it. Saw the crash happen in 2007, invested in non-property kind of investments, lost all the money there. Okay. Owed my dad a lot of money, so I literally had to kind of graft, I suppose.
Work hard.
Yeah, and kind of fell into rent to rent in effect, where didn't have the capital, a lot of debt. Started taking properties on a company let, and then kind of fell into London probation, other kind of contracts where we could arbitrage play on LHA rates in effect. Yeah. So just built the rent to rent portfolio to
a decent cash flow in active trading business effectively.
Yeah, that was it, fully operational.
And is that something you've still got today?
Yeah.
Okay.
Yeah, kind of dying that down. So the rent to rents are kind of coming down, but we've just been buying.
Trying to own your own assets. And just on the rent to rent, so how many rent to rents have you currently got roughly?
I think, so tenant wise, I think it's probably around about 350-ish.
Okay, that's a lot of tenants to be managing.
Yeah. And then we've kind of gone a bit over. So I think we've got probably about 450 own tenants. So
that would be considered a very good lettings business. Lettings and management, if you had a lettings book of over 350 lets, that's a profitable letting business.
I think at our peak, we probably had about 750.
Wow.
Yeah, on the rent-to-rent side.
That's quite operationally heavy as well. So
yeah.
how are you managing that? Have you got software, systems, processes, people?
Oh yeah, it was. To be honest, we couldn't find anything off the shelf, so we had to create a bespoke dynamic CRM software, and then we kind of just change and adapt. And yeah, it's difficult because it's kind of rent to HMO, so not many systems. Well, back then anyway, because everything kind of moving.
And very complex, very operationally heavy as well.
That's right. Yeah.
And what's the plan? So you've obviously built up this rent-to-rent portfolio, which again is an active trading business, very light on in terms of assets and investment. And now you're shifting towards a heavy investment and asset-backed business, but with the same model.
That's right. Yeah, because fundamentally we know we can deal with 800 tenants.
Yeah.
So why pass majority rent to the landlord when we can actually be the owner? That makes sense.
And you are London home counties as well?
Yeah. London. Yeah.
So that's quite capital intensive.
That's right.
That's going to be very capital intensive.
Yeah.
Are you using cash flow from your rent-to-rent business? Are you raising joint venture funding? Are you raising sort of loan notes?
So
Talk me through that.
I mean, just literally the retained earnings from the
Rent-to-rent business is just going back as deposits to
the
buy them.
OpCo, and then learnt the commercial valuation kind of thing, where literally you could buy bricks and mortar value, add value, tenant it out, group together portfolio of properties, and then get it valued on a commercial val, pull out all your money and some reasons.
What's the long-term plan?
Because
clearly you're building quite a big business here as well.
This is it, isn't it? Yeah. So looked about maybe setting up a REIT, setting up a social housing fund, maybe even convert to a housing association. But then it's, if you exit, what do? You buy property. So it's kind of always at a crossroad, isn't it?
Yeah.
Hi, I'm Michael Alison. I'm the Commercial Director at Roma Finance, and I'm delighted to tell you that Roma Finance have the Flow Bridging range, which is specifically designed for those fast completions, which will come in handy when you're looking at purchasing a property at auction. If you want to know more, please don't hesitate to get in touch. Thank you.
I think most people don't have the exit in mind when they're doing these things. They're kind of just building and doing and just getting across the day-to-day of their business and almost trying to just survive and keep their head above the parapet sometimes.
Firefighting, isn't it? Yeah.
Firefighting. And then they get to a point where someone gives them an offer and then they just think, holy shit, and I tell you this because I went on there's a supercar retreat we went to in Croatia, and I was speaking to a guy who built up a big infrastructure business, so telecoms infrastructure business in Africa at the time. And he said he got a random call from Goldman Sachs, and they told him, Vodafone wants to buy your business.
Wow.
And he said, how much? And they told him 9 figures. It changed his life. It was complete. He's never worked a day since then. And the intention wasn't that. It was just so sometimes you go about your life, you go about things, and it's like, these things happen. You'll have a conversation, you'll get big enough that you'll have a conversation with someone and they'll notice you and they'll just want to eat your business up into their business and they'll just blend it in. So, you just got to keep doing you.
Sound good to you, Sam?
Maybe not 9 figures with this space, but even 7 to 8 figures is still a big number. So, brilliant. And tell us about the deal that you're currently doing at the minute. So you've got something on the go, something juicy.
I'm literally trying to sort it out. So I always got probably about 9-10 deals kind of actively on the go. Exchanged on 7, I think, last week. So it's always constantly buying, not trading.
Yeah.
But so the one, it literally picked it up in auction.
So you've exchanged on it already, or?
Yeah, exchanged on it.
Okay.
I've got to complete actually in a couple of days. So that's why it's.
It's a bank one, right? If it's.
With the bridging. Yeah, that's right. Yeah, so it's a repo. Great, because it was tenants unknown, users HMO, in an Article 4 area. So it's just kind of.
So you have to now prove that it was an HMO before the Art 4 came in.
That's right. That's right. So, I've already sent my team kind of knocking, spoke to tenants, need to get the stacked decks, get the certificate of lawfulness. But straight away, I know I'm buying less than bricks and mortar value because no one's really looking at the moment at that kind of asset.
And that's a key metric for you. If you can pick something up below reinstatement, what you can build it for, that's a deal. That's like one of the tick boxes.
Yep. If it's 20% below market value, or but this one wasn't. But I know that straight away. soon as we tidy up.
But I think that's the key. So the key for you is you're in such a niche market. London, home counties, anything that used to be a HMO, anything where there's a bit more complexity, i.e., for example, tenants unknown, etc. You're operating in a really niche market, which means you should be able to pick up deals at the right money for that, because you're not going to have so much competition. Most property traders probably won't buy that kind of stuff because that's not their bag usually.
Yeah, and it's a flat as well. Yeah, so not many even investors are looking at that kind of stock where it's a HMO as
Owner
a flat.
occupiers won't look at it, investors, traders. So really you've got a very, very, very specific niche market, which I think is why you probably pick up the stock at the right money.
This is it. Yeah, I kind of want to house tenants no one houses. I want to buy stock that no one wants to buy. So it kind of works.
Sounds good.
So it's a flat. But there's something in the back of my mind that says the deal that you won, Property Deal of the Year and HMO Deal of the Year, that was a flat as well. That was Watford.
That's right. Yeah.
Tell me a little bit about that one, because I'm a judge for that for the awards.
Yeah.
But I don't judge the HMO categories or the Deal of the Year. I judge like SAS and Trader of the Year, and I judge a different day. But the noise that was made from the judges about this deal was redonkulous.
I mean, to be honest, I should have applied for Property Deal of the Year, and then I would have got five. And that probably would have won it. But it was actually only one. It went for property, HMO Deal of the Year over 6 rooms. Yeah. And actually, I didn't know which one won that category. I had about 2 of those. Yeah.
I'm curious now. Tell us about the deal. We're going to judge this together. Me and Jay are on the panel, right? Tell us about this deal.
It was actually. I only saw it post auction after it was unsold.
Right. Which auction house was it with?
London Auction House.
Auction House London. Okay.
Auction House London.
Interesting.
So straight went in there, and I kind of knew because it had another housing provider on there that we kind of know.
So this was a flat, yeah?
Well, it was actually a freehold on top of a shop, but it was 11-bed HMO.
It's 11-bed HMO?
Yeah. And it was
so you owned the freehold to the actual shop. So the shop had a lease, a long lease.
Yep, long lease, and then the actual purchase was a freehold.
That's good. So you had full control over everything.
That's right. Yeah, 100% correct.
Right.
And it actually had planning on it, and the restriction on the planning wasn't to X amount of rooms. It was just HMO use. So I knew I could kind of intensify it, but I didn't even have to do that. So literally worked out the numbers, picks it up for, I think, 720.
What was the guide on it?
I think about 700-ish.
About 700.
Yeah, okay. I can't honestly remember. Yeah. And literally it just looked like, to be honest, our tenants just leaving. So we're just used to exactly mopping it up, kind of just whitewashing it. Saw the layout, literally could just move a few walls around and intensify the number of occupants on there. Literally just upgraded the license, I think, from 11 to 15. Spent not much on it, 25k, because it was quite a big lot. Rented it out, got a commercial val for the area. Can't remember what the yield compression was on it, 8.5%, something like that. Valued at 1.4.
Wow.
Yeah, so pull out your money and some.
What do you think, Jay? Does that make your deal of the year for 2025?
I'm a bit stingy with the points that I award on like deals. I think 2 years ago I gave 2 10s, which is like the highest mark you can give a deal.
Funny enough, 2 years ago is when I won Property Trade of the Year as well. So.
And then last year I didn't give any 10s, and then this year I gave 2 10s. One of the deals was insane. I would have given that a 10. I would have easily given that a 10 because it's just going. I had to move a couple of walls. It was a 25 grand job.
So that's not even it. So then we just got planning for using the PD rights. This was planning yet to go into the loft. So we've got 5 rooms now in the loft.
So you've got total 11 plus 5, so 16 rooms total.
Yep. And we got planning, but it got declined on the mansard for the
now you're trying your luck.
for now, but we've gone to appeal on that. So it could be a 21-bed HMO in effect.
Wow.
You'll have to resubmit it for another deal of the year.
Maybe I should, yeah.
And going into that deal, what was your mindset? Was your mindset like, I know exactly what rental income I can get out of this because we've got the operations?
That's right.
What was that kind of income that you were thinking about?
So we always look at 15% minimum.
15?
Yeah, minimum 15.
And is that based on you getting a lease from your operational business? So your operational business was going to give you a lease on that property?
Lenders don't like that, so we just do it kind of.
So you're just managing it?
Yeah, in effect.
Right, okay.
Yeah,
so you're 15% based on the income you're getting from the councils, yeah? Is that right?
That's right.
So then just a quick reminder for everybody, this is London and home counties is getting 15% yields.
Yeah.
You know that
with the capital appreciation
with
as
the
well that
capital
you're going to get
appreciation
from
as
that,
well.
and you've doubled the value effectively with 25k.
Yeah.
So why do you think that property went unsold? Why do you think no one's looked at that? Is that because you have the operations to deliver a large HMO?
I just think normal. Whenever I speak to your average kind of HMO investor, they're always looking for houses that you can extend at the back, go into the loft, 6-bed, en suites, private rental, how close it is to a station.
Cookie cutter stuff.
Yeah, that's it. Where I'm looking for stuff that they're not looking at. You know, away from stations.
Nice.
Yeah, usually flats on top of shops, ex-councils that we convert into HMOs or minimos or.
Does
whatever you kinda
that
say.
create a problem for you when you exit? I.e., is it leasehold? So you buy leasehold as well?
Yeah, we buy leasehold. Yeah.
Is that going to create a problem for when you exit in terms of if it is a REIT, for example, that buys you or whatever?
It is potentially, yeah. I have spoken to them. They don't like flats on top of shops.
That's why I was asking you.
Yeah.
Could you maybe separate that out and create two different SPVs? One which is a clean freehold SPV and one which is just for leasehold. Maybe even just retain the leasehold stuff because clearly it cash flows really well.
This is it, isn't it? Yeah. So it's always when it's a good deal and you know you can get 15% yield. It's hard to kind of say no.
You're not going to say no to that.
Yeah, this is the problem. Yeah, but we do have different SPVs so we can kind of move stuff around and all the rest of it.
Okay.
Well,
I'll give him a 10 as well then. Thank you.
That's done me, yeah. I was fine at the 16. He's like, oh, we're going for planning for initial survival. Hold on. Excellent.
Just on that point as well. So some people, when you do the purchase and then obviously refinance on a commercial val, some people think, I don't want to be over leveraged here. I don't want to be overexposed. Does that worry you at all? Just because obviously you are valuing it at a price where most likely you're not going to be able to sell it for that.
Yeah.
It's just based on the commercial value because you can operate it, right?
I mean, it's like political risk. If we know the government's going to change and if, I mean, Labour, very kind of social, housing, etc. So we get the direct payments from DWP or councils anyway. So it's kind of de-risked in that sense. But we are looking to knock off capital straight away kind of thing for the next 5 years.
So using that to aggressively expand, but then at some point you want to start paying down a lot of your debt as well.
Yeah.
That makes sense.
That's it.
And roughly, what does your debt level sit at when you're looking at commercial vals? Is it 75, 80% or?
It's on top of between 65 and 75, sometimes 70. Yeah.
That's not bad. So you're obviously you're getting the high valuations, but you're still sticking to a lower LTV, which is quite clever.
Yeah. It's just lenders on top of shops, ex-councils. They always use a lower LTV anyway.
Yeah, that makes sense. No more questions, Your Honour.
No more questions. So if that's impressed you in the same way it's impressed us, then keep watching, essentially. Like, subscribe, comment, and
Sam,
congratulations.
Thanks for coming on. I think that was phenomenal. I genuinely, when I saw you win all those awards, I genuinely was so curious to actually understand what was the deal, because we don't get told what the deal is on the day.
But the strange thing was I actually applied for, because I had 2 deals.
Yeah.
So, or 2 or 3 that I applied for there. So I didn't know which one actually won it.
Did you have a better one?
I had an easier one.
Right, okay.
Yeah. Oh, no, sorry, the harder one. I had an harder one where we had to do the planning, go through it, and still pulled out more than we put in, all the rest
But this
of it.
one was an easier one. That's probably why.
That's exactly it. Yeah, so this was the easy one. Yeah.
But yeah, well, thanks for coming on. It's been great to have you on. It's been good to talk as well. And obviously, I think a large part of what you're doing is all about growing your operational business as well as growing your asset-backed business as well. So yeah, really good to understand a bit more about that and the operational side of things. And if you guys have any flats above shops that you want to sell to Sam, you know who to reach out to. So we'll drop his comments in the comments below as well. We'll drop his details in the comments below. And yeah, thanks for having you on, Sam.
Thank you.
Brilliant.
Cheers.